Okay.
This is my first time to be here, so
And
definitely I'm glad. I'm glad to be hosted here. So the microfinance sector in Uganda, to understand it better, you need to get some bit of history first.
Okay.
First of all, microfinance is not a concept that I can say is wholly originating from Uganda. When you look at countries like Bangladesh, for example, these are countries that are traditionally known to be the origins of microfinance.
All right.
Banks like Grameen, these are the kinds of banks that you'd be talking about as probably the grandfathers of microfinance. So in Uganda, the microfinance sector is not very old. It started in the around 90s and early 2000s. And currently we have two kinds of microfinance institutions.
Okay.
Those that are regulated under the central bank, that is the Bank of Uganda, and those that are regulated under what we call UMRA. UMRA is Uganda Microfinance Regulatory Authority.
Yes.
So under those that are regulated under the central bank, you have institutions like Pride Microfinance, you have institutions like EFC and a few others. Then those that are regulated under Uganda Microfinance Regulatory Authority, UMRA, we have institutions like Leseo Uganda, where I work.
Okay.
You have institutions like Bayport and a few others as well, Platinum and all these institutions.
Okay.
So Uganda Microfinance Regulatory Authority to come in, it was actually after a long time when that sector was not regulated at all. So because of the attention that that sector is actually attracting from all stakeholders, including government,
okay,
people were like, look, I think this is and develop and nurture and improve the business in Uganda, and therefore that's how UMRA came into existence to try and regulate
the microfinance sector.
Yes, yes. So currently, that is, I should say, the brief about the microfinance sector.
Okay.
And most importantly, it is growing. It is growing at a fast rate. When you look at the statistics, right from, let's say, 2009, this sector was basically introduced to try and bridge the gap that was being left by the traditional commercial banks.
All right.
The researches that have been done in the recent times, you'll find that around 16 to 18% of the bankable of the adult population in Uganda are the only ones that can access the what you would call the formal banking services.
Because I wanted to also ask you to try help the viewer understand the difference between the two.
Yes.
The ordinary commercial banks that we're used to,
yes,
and the microfinance sectors or the microfinance institutions.
Okay.
What are the key differences in there?
Okay, I will try to answer it like this. First of all, the commercial banks, they have what we call tiers.
Okay.
Tier 1, Tier 2, Tier 3, Tier 4. So the microfinance institutions are what we call Tier 4 financial institutions. I will not delve into the differences and features about each and every tier, but the commonest differentiating factor is taking deposits. Okay. So commercial banks basically take deposits, and they are regulated by the central bank, Bank of Uganda.
Bank of Uganda.
Yes. Most of the financial institutions are not regulated by the central bank, and they do not take deposits. Like, for example, where I work, let's say it's not yet a deposit-taking institution. Maybe in the future we'll be deposit-taking, but as of now, we are not a deposit-taking. So we concentrate on lending, we concentrate on credit.
Yes.
We do not receive deposits from the public, and we do not do other services that traditional commercial banks undertake, for example, electronic payments and all these kinds of things. Yes.
So in simple terms, with the microfinance sector,
yes,
it is not a place where someone has to go and save money.
Exactly.
Okay, you can apply for...
Although there are what we call savings groups.
Okay.
So they also fall under the microfinance sector. So you find, for example, SACCOs.
Right.
Members come together and agree that they'll be pooling together savings. They put them in the same pool, and those savings will be helping them to access credit.
All right.
So you do not take those to be savings from the public because they are pulled together from members who have come together.
And they still look for them for
exactly
facilities.
So you will not invite everyone to bring their savings. You must first of all be a member of such a group for you to be able to contribute savings to that group.
Okay.
And also in settings like ours, for example, where I work, we have what we call the group loan product. So the group loan product, you find that you have a group of 10 people, Sonko and Dennis and a few others come together, they pull some money, and that money can rotate within themselves, and also they can use part of such funds to guarantee their loans that they get from the microfinance institutions. Okay. So there's some bit of pooling money, but you wouldn't call that deposit taking in the strict sense that is defined by the central bank.
All right. Yeah. And if you're just joining in, we are discussing the role of the microfinance sector or the microfinance institutions in the recovery of businesses in Uganda. And that is where I want us to dive into directly. From the perspective of the large businesses, or are they the macro? These words definitely normally confuse me. Macro.
Yes,
the macro businesses.
Macro.
How?
We have macro and micro.
Oh, yes.
So the big ones are the macro.
The macro.
Yes.
How does the microfinance step in to help these macro businesses recover?
Thank you very much. You need first of all know the structure of the economy of Uganda. First of all, research shows that between 60 to 70% of the economy of Uganda is made up of small and medium-sized enterprises. Okay. And therefore, when you look at the main funders of such a sector, they range from commercial banks to also microfinance institutions. And the commercial banks definitely, by their nature of business, they are mostly profit-oriented. They are mostly looking at the return of the shareholder. Okay. They are looking, therefore, at the top of the pyramid kind of population. On the other side, the microfinance sector is looking at the lowest pyramid of the population. So the people that we call the low-income earners, or actually in the microfinance sector, we normally use the term active poor.
Okay.
Someone is poor, but they're only lacking capital. They have a good idea. They have very interesting ideas.
They only need capital.
All they need is capital.
Okay.
So that means that if you give them an opportunity, if you kickstart up them, then definitely you're going to create an impact to that individual, to the economy, the sector they're operating in. And this has been actually very, very manifesting in the current business environment.
Okay.
Yes, businesses that start very small, businesses that start, someone selling their tomatoes downtown in Nakasero, or someone has their small grocery shop. They have been able to access credit from microfinance institutions, and before you know it, someone is owning a shopping mall, someone is owning a big business. Okay. So basically, the microfinance sector is the bridge between the mainstream commercial banking and the lowest person. Because such a person, first of all, they lack capital. They lack even the collateral to pledge to the banks. Okay? You'll find that the mainstream commercial banks are looking for customers that have what they can pledge as security. In the microfinance sector, we are looking at the character of someone.
Okay.
It's not that the other banks also do not look at the character, but we do not so much emphasize on collateral, and we also cut down a few procedures that the traditional banking sector follows. So we try to understand that our market is the poor, the active poor. Okay. They have good ideas. They may not have a good credit history, for example, yes, because of the nature of their work, but they have ideas in their mind, which, if nurtured, can actually drive business. Okay. So that's really our sector, and the microfinance sector is really showing good results. It's showing good results. Businesses are graduating to the level where they can be funded by the commercial, the traditional commercial banks.
Now let's bring it down to our small businesses. Yes, I think this is the entire trader community in Uganda, because this is where most of them fall under.
Exactly.
Most of them got a very huge challenge during COVID, because their businesses are day-to-day businesses. They focus on the daily customer, a customer who comes to you directly. Now, during COVID, most of them collapsed. The owners switched to other options. Others no longer have hope. But in regards to how the microfinance sector can help these businesses recover, if you're to look at it in that perspective, is there a chance, and which ideas would you give to these people?
Yes, definitely there is chance. You know, the last few years have been very trying for the economy, for Uganda, for the entire world. After COVID, you talk about the war in Russia and Ukraine and all these things. So it's been trying time. After, in the post-COVID recovery around 2021, we had hoped that we would see businesses thriving again. But before we knew it, the war erupted in Russia and Ukraine. And of course, Uganda as an economy, we are net importers. We depend on imported things to do business, even for consumption. Most of the things that we do here, that we consume, they're imported. They're imported from the outside world. So definitely there has been a big disruption by the two main factors. And coupled with the rising fuel prices, food prices, and all these things, we have seen a trying time for the business. But as you know, any business thrives on cash. Cash is basically like the breath. It's like business. The blood of business. So where microfinance institutions have come to help such businesses is where they provide financing. You find someone who had basically closed a business. I think the main sector that was actually affected was the schools, for example. Some of the schools closed because they couldn't operate. No working capital, no nothing. So when the economy was opened and the schools reopened, the financial institutions in both, of course, in the commercial banks sector and the microfinance sector, try to fund these schools. And we see most of the schools are actually bouncing back. The same with other businesses that were initially importing huge volumes but had cut down because of COVID, because of the war. We see them now trying to come up because of getting financing. In business, cash flow is a lot more than just profit. You can be profitable when you do not have cash. First of all, sort out your cash, sort out liquidity before you talk about even profits. So where financial institutions, the microfinance sector come into play is they fund those businesses, they give them cash to be able to drive their businesses.
All right. And driving business is actually what we do here. So for all the information that you would want for businesses, but this coming next year, most businesses are trying to have a recovery mode and recovery processes. Before we go into a break, I want to also know something. In regards to recovery and the microfinance, the issue of giving out credit, facilitation and all that, do the interest rates favor these businesses?
Two things. Number one, the interest rates, of course, obviously, they are higher than those that are charged by the traditional commercial banks. For one reason, the traditional commercial banks are deposit taking. They have cheaper deposits, I should say. You find if you save your money in a commercial bank, you are given probably between maybe 8 to 9% interest on your savings.
All right.
Now, if a commercial bank is holding such a deposit, they're able to lend it out at, let's say, maybe 15-20%. But now, the key challenge in the microfinance sector is because we are not deposit taking, we also depend on borrowed money. We basically retail money. You borrow from a commercial bank or even other development financial institutions, the Stromi of this world, EFC and all these, to do business. So you find, of course, there's no bank that will lend you money at such a rate of 8% to 9%, which they give on deposits. So if you're getting it at, let's say, 16% or 17%, there's no way you can be able to lend it at the same rate which a commercial bank is lending at. So definitely, it drives our interest rates a little higher, but we do not really so much look at profit. We look at how do we drive the value, the impact in the sector. How do you help someone? How do you help someone to drive, irrespective of the business challenges that they are facing? How can you help them improve their business? So you find that it's a bit of a challenge, the interest rates, and also that affects recoveries, of course. Recoveries become a problem. Most clients will be struggling. Most clients will be wanting to use terms of the loan and all these things. But we sit down with them. We see what is workable. Of course, the aim of any financial institution, whether microfinance or even the commercial banks, is never to sell somebody's collateral.
Yeah.
Okay? It's never that. But because we must also remain sustainable. Sometimes you are forced into, let's say, liquidating foreclosing on the securities that they would have pledged.
Okay.
And also, the other aspect of recovery is on personal guarantee. When you find that someone has borrowed but someone else had guaranteed them, then we would reach out to those persons that would have guaranteed them, or even sometimes like the group clients who would have guaranteed each other. We would have to reach out to their funds that they would have pledged to us as security. So it's a bit of a challenge, but it's actually working. The impact may not be as big as you see in the commercial banks, declaring profits of so much billions and all that. But we really focus on the impact we are creating, because we believe that with such continuous impact, then the economies are going to grow, businesses are going to grow, and everyone, at the end of the day, are going to benefit.
All right.
Yes.
And also, if I am to ask, in the last 2 years, I believe your sector and also maybe the Uganda Development Bank and commercial banks, of course, have been the main focus of recovery ideas. If you're to at least help the viewer understand, from the macro, micro, or small, medium sized businesses or enterprises, which sector has been applying for more credit?
Actually, in Uganda, most of the sectors really, it's the normal commercial, what you call general trade.
Okay.
Someone has their shop in downtown, and the nature of the business is that they import things from China or Turkey or wherever.
Yes.
Then they sell them, they retail them to the local community. Some of them here in Kampala, for example, or even up country. So you find that the biggest portion of the sectors that have been taking such credit facilities are the general trade, what we call, where I work at, let's say, what we call MSE, micro and small enterprises, generally, general trade. But of course, also we have what we call deduction at source. These are public servants who are working in government. They're not in business, but they access credit, most of them for consumption purposes. They want to improve their house, but their size is not enough, so they reach out to a financial institution like, let's say, or wherever, and they get some funding to do home improvement or put up a building or something like that. So where you work, the biggest portion of our loan portfolio is basically what we call deduction at source. Those kinds of customers, the public servants. But of late, we are trying to put a deliberate effort to grow even the MSEs, what we call program loans, or the normal business loans. So they cut across ranges, really, of sectors. Schools have been coming. Agriculture, people are involved in agriculture. Someone is doing cattle fattening, for example, or someone is growing rice. They have been coming to get these kinds of facilities. I've talked about the schools, of course, and all other small businesses, really. There are quite a number of small businesses. People do all sorts of businesses. And when you go out there, you actually see the home of innovation. People have very interesting ideas, something that you even never thought about, but someone is trying to nurture it into something that can be income generating. So all those small little
kinds of businesses, we fund them. And we've seen them grow. We've seen them grow over time organically, and we believe in actually organic growth, where a business starts from almost zero up to where it is, a very credible business.
Okay. Yeah. And after the break, I think you're going to take us into a discussion of, we've got 10 minutes after the break, but I would want you to break down, one, how people can benefit from the microfinance sector and its impact to Uganda's economy today. Stick around, that is what we're having for you after the break. More conversations on the recovery of Uganda's businesses, but more so the importance and the role of the microfinance sector in shaping this around. This is SMB.